Here we look at support failure, in particular how support, once failed, changes into resistance. Here's AIG, for example. All during the early part of the millennium, on a split-adjusted basis, a four-figure stock, but the failure took place at around 700. And once that blue line was pierced, it was utter collapse in the value of the stock, principally because of the length and clarity of that pattern. Here's a different example, Sterling Financial. Likewise, we have a support level here at about 1200. And take note in particular how it was challenged at first, and then once it was pierced, it changed roles to resistance. So 4 different times it took a lunge for that former support level, but once it had failed, its new role was in place. Indeed, even some months after, it took another big push up, literally many hundreds of percent toward that old support line. Here's Dynegy, going back well before the financial crisis. This is back in 2000, 2001. And here is the break at about 160. You can see support failing. And then after meandering for a few months, another big push up toward what used to be support and now was resistance. Following that, however, it lost virtually all of its value. Once again, the clarity of the pattern really told the tale well in advance. Let's look at a different example. Here is Atlas Pipeline, and here we've got a nice rounded top going on. Support is at just below 26. It fails, tries a couple of times to get above it again, but all that overhead supply is well in place. And yet again, we've got a drop in value literally exceeding 99%. Here's something which is happening during this recording, actually, so I can't point to a gigantic return, but showing how support has failed both at this trend line, this long-term trend line, as well as these 2 horizontal lines. We'll see what the future holds.